Good afternoon. Hi, everybody. Thank you for attending today's special webinar. We decided to put this webinar together today, and the reason why is to focus on financial viability and business planning. Hi, Sir John. What we find is that some people are having issues with putting together the financial viability and the business plan, so we decided that why not do a webinar that's specifically for you guys so that you can put this together. And hi, Peter. I've got Peter online as well. So people are saying hi. So this webinar is going to be recorded as per usual, but what we're doing in this webinar is it's going to be a special one on how to put together the projected profit and loss document, which is a spreadsheet, and what you need to put in there, and then how to write your business plan. This is relevant for anybody who hasn't submitted for Kickstart yet, or anybody who's interested in submitting for CRICOS application. You will also be required to do the financial viability stage for your CRICOS application. Or if you just wish to update your financial viability and your business plan. Okay, so this webinar, not necessarily today, is going to be part of your continuous improvement, but you should review it. There is a couple of standards that it relates to. It's actually some of the standards under standard 7. So 7.3 is your financial viability and looking at your projected, so some of it is projected profit and loss, but if you go under standard 7, that's part of financial viability requirements. And under standard 8, you're looking at your governance requirements. So your business planning comes under there, under the governance requirements and things like that. So there's a range of things standards that it will cover, but not necessarily will there be a policy and procedure on it. So you don't necessarily have to update your policies and procedures for that. So the majority of this webinar, we're actually going to switch over to my desktop, and I'm actually going to go through line by line the business plan, what you need to do in the business plan, and we also are going to go line by line into what you need to do for your projected profit and loss, and going through the spreadsheet and what you need to include in there. What a lot of people struggle with, particularly being an initial registration, with what will my figures be? What do I need to put in there? What will my business look like in the future, and what should I put in there? When you don't know what you don't know, it's very hard to put data in when you don't know what that is. So that's why I'm putting this webinar together today, because it's basically from my skills and knowledge what we need to go through in order for you to set up those documents. So cool. All right, we're doing well. We've got 8 people online, so that's awesome. So if you have any questions, as per usual, throw it in the chat box on the left-hand side. I've had a couple of hellos already, which is awesome. So yeah, if you've got any questions, it's better if you throw some questions in, because then I'm able to address your questions. So if you've got any concerns or anything like that. Hi, Veronica. Glad to see that you got online. I was just having a chat to Veronica earlier today, so it's awesome. Thank you for getting online. So if you have any questions, please throw them into the chat box, and I will answer them as I go. And I'm very responsive, so I'm looking at it regularly. So I'm going to switch you over now to the desktop, and we're going to have a look at the business plan template. And you're going to have a look at what we've got in here. So as I said, if you have any questions, throw them into the chat box on the left-hand side. Okay, so I have the business plan template. This is the one. Now this will be populated with your details when you download it from Unicorn. It'll have all of your logo and your business details already in there. But I'm going to the template because there's a few things that that your CLO will put in there, and then there's some things that you'll get when you just download it from Unicorn. I think what happens is, actually I know what happens. The CLO will generate the document and then attach it to the email that you get in Unicorn, from Unicorn. That is the whole business planning process. Okay, so basically this first bit is going to be filled in for you. As part of the ASQA requirements, you need to have a 2-year forecast on where you will be in the next 2 years. I think it might actually, it's a 3-year forecast. I need to actually change that on there. So it's actually 3 years that you'll have in there of a forecast of where you'll be. So this is where what you plan to do in the next 3 years is what should be in your business plan. So where do you want to go? What other qualifications do you want to have in your scope? Are you going to have a bigger venue? Like it's basically getting a crystal ball and going in that crystal ball, all right, this is what I forecast is going to happen in the next 3 years. It's not set in concrete. It's not, ASQA aren't going to come back and go, you said in your business plan you're going to do this and you haven't. Why haven't you done that? It's not set in concrete. You can do whatever you like. So you could have it so that there is what you plan to do in the next 3 years. ASQA are not at any stage going to come back and say, very naughty, you didn't do what you said you were going to do in your business plan. Why haven't you done that? They just want to see in the business plan that you know how to do a forecast for the future. And in actual fact, ASQA are never going to see this business plan. The business plan is part of the requirements for the accountant to actually see. So the accountant needs to see the business plan to say, yes, they do have a business plan, and yes, it does have their forecast on where they're going to go and what they're going to do. So ASQA are never going to see this. The purpose of you having this business plan is you could use this for getting a bank loan. It could be possibly for tendering in the future. You might be tendering for a government contract. You might be tendering for a business contract. It is also used for identifying where you want to go in the future. So it could be potential business partners that you take on board who need to know what you will be doing in the future, what you plan on doing in the future. So that's the purpose of the business plan. It's not necessarily that you're going to have something there that ASQA is going to see. It's more of a document that you'll use in the future to identify where you want to go in the future, what you plan to do in the future. So we'll go through that. Whereas and when we go through the spreadsheet, so we've actually got the spreadsheet as well, so we'll be having a look at this today. So this is the projected financials spreadsheet that you will receive. So the projected financials, that's different. Or actually, this one doesn't actually go to ASQA either. They'll never see this one either. So both of these documents are going to the accountant, and the accountant will determine from this, they'll determine from the business plan and the projected profit and loss, what are the requirements of, that you have met the requirements of financial viability as part of your application process to ASQA. So that's the purpose of that. ASQA, as I said, ASQA is never going to see it. But they are both documents that you should be working on. Okay, so we'll commence with the business plan. So the business plan. Basically, this executive summary at the top, you basically should do this at the end of completing your business plan. It's a summary of where you want to go and what you want to do. So in this section, you need to focus on why do you want to become an RTO, or why do you want to register for CRICOS. So if this is both for initial registration as an RTO and CRICOS, but also if you are going to add CRICOS as a registration, you'll need to complete this business plan as part of your CRICOS registration as well. So in here, why do you want to become an RTO? Why do you want to be registered at CRICOS? So what is the purpose of you setting up as an RTO? So normally it's because you've identified a market, potential students. If you're going to CRICOS, it's because you already have identified potential students that you're going to bring into Australia. It might be that you have a qualification that is specifically going to meet a need for international students coming into Australia, or it could be you already have a target audience. As an RTO, it could be that you're already operating under a partnership with another RTO, delivering training and assessment, and you've made the decision that now you're going to set up as an RTO and run your own RTO. And in that, in this executive summary is, why have you made that decision? Why did you make the decision? We were operating under a partnership and now we want to set up as an RTO. Most of the time it's because financially you are better off to set up as an RTO than running under a partnership, and depending on how long you've been operating for. So if you've been operating under a partnership for 3 years and you've identified from that partnership that now we have a good customer base and now we want to move forward and set up as our own registration and manage our own compliance, because now we have enough work there to do that. So that's just one example of what you could put in the executive summary. So at the start, we've pre-filled, so anything in yellow is what we need you to fill in, and you should delete anything in yellow. So once you've read that, you should delete it, and you should delete anything, once you've answered the question, you should delete that. But this really, like we've given you an idea of what to put in your executive summary, you should rewrite this whole executive summary. But to make it easier, we've put some text in for you. As I said, ASQA are never going to see this, so it doesn't really matter what's in your executive summary. It's more if you are looking for a business partner, or you're looking at getting a loan, or you're looking at going for a government contract or a contract. That's why you put this executive summary in there. So it identifies who you are now and where you plan to be in the next 3 years. So we've just put in there that you've engaged Vivacity as part of your application, and that you'll be working with us into the future, and that you're dedicated to run a best practice RTO. So, we've just put standard stuff in there, but you should adapt this to meet who you are, what your needs are, and where you plan to go into the future. So include below, why was it that you wanted to become an RTO or cry cost provider? You will also be asked this at audit. So normally the ASQA auditor will ask the CEO, why did you want to set up as an RTO or register with CRICOS, and be really clear what you want to achieve. So what you plan to do in the future. So during the process of writing the business plan, it was our determination to become an RTO. We've consulted with industry, and we've got a strategic plan on how we plan on doing this. So that's basically the executive summary. That's what should go in there. A lot of people get stuck on this, on where they want to go. Sometimes what the CLO will do, they'll just copy and paste this from your TAS, or they will put what you've put in here into your TAS. So the reason why you want to become an RTO, why you want to put certain qualifications on your scope. Okay, so that's the executive summary. Throw questions up as you go. So if you have any questions about that executive summary, let me know, and we can answer those questions. This is your opportunity for me to answer those questions that you may have. So your financial forecast. Basically, this information we're going to take from the projected profit and loss document that we're going to be looking at soon. So basically, we take your figures out of that. So you take the figures out of that and then put it into your business plan. So in this section, we're just providing a snapshot of what your profit and loss is. So what you would see as in the future would be a projected profit and loss for the next 3 years. So I'm just going to put year 3 in there. See, editing the documents okay, so what your sales turnover is and what you think your net profit will be. Now, normally, with any business, in the first 3 years, you're going to run at a loss. So depending on how much capital you're injecting will depend on how much that loss will be. Now, you don't take into consideration your capital injection. So what are you originally putting in to set up the RTO? Because that's your setup costs. So we don't look at your capital injection as part of the loss. Your loss would be, what if you had made a loss within the business. So the reason why you do a budget and the reason why we do a projected profit and loss is to identify where do you need to be to ensure that you do break even or make a profit. So what do you need to do? How much money do you need to have come in so that you know how much you can spend? So this is how we identify it. So with the projected financials that we're going to do, you actually need to have it so that you are making a profit or breaking even. So it should be in the positive, not the negative. So your figures in there will be in the positive, not the negative. So I'll be going back to have a look at that later. Okay, so that's just the table of contents there. So that document, that table of contents, you could just right-click on that and update field, and you just update the page numbers only. So the headings should stay the same unless you've added a heading, but the headings should stay the same, and you just update the page numbering. So the last thing you're going to do before you submit this, and your CLO should look at this anyway when they before they submit, is update that field. So looking at the page numbering. Okay, this business structure, a lot of this will be pre-populated. So RTO name will be in there already. Your trading name will be in there already. you need to get this date, your business name was registered from your ASIC statement, historical statement. The state will be pre-populated for you already. What type of business do you have? Do you have a proprietary limited, a trust, a sole trader? We recommend that you set up as a proprietary limited for all of your businesses. The best plan is to do a proprietary limited. Just while I'm onto that, I might just, I'll just try and explain to you. I think I can do drawings. Do a drawing technology. No, I don't think I can. I was thinking I might be able to do a drawing. So I'll just go back to the desktop and see if I can show you. I'll show you how you can actually best set up your business. So the best way to set up your business, let's go in new document, new blank. Okay, so the best way to set up your business, so, and I'm just doing this on the fly, so I didn't plan this ahead. So what I recommend when you set up a new business is that you set it up as a, so we're just going to do a hierarchical structure here. We're just going to do it that way. So the best way to set it up is if you currently have a business already, if you currently have another business already operating, I recommend that you keep that current business as a standalone business and that you set up your RTO as a separate entity. Now you may have another business here. You may have another business set up there. So we recommend, so if you currently just have one business in place at the moment, that's all you have in place at the moment, you set up your RTO as a separate entity as a proprietary limited. So you set that up as a proprietary limited, and you don't have to do it straight away, but down the track, you should set up a trust fund or another company. So a trust or something that will be over the two businesses. This is what I recommend, how you should set it up. So you should set up, so the reason why you should set up your RTO as a separate entity and not register it as your current business is the reason why you should set up your business with the end in mind. So when you set up an RTO, set up with the end in mind of when you go to sell that RTO. If you set up the RTO under your current business, that current business is becomes part of the RTO. When you sell an RTO, you can only sell the shares of the RTO. You can't split the business. You can't say, I'm going to sell this part of the business and keep this part of the business. With an RTO, you sell the whole shares of that company, so that proprietary limited. So if you registered your RTO under the current business, so if you set it up so that it was under that current business there, what will happen is that business would then be, so I'm just going to change the coloring there so that we can see the difference. So let's go purple. So if you set up your current business as the RTO, what will happen is when you go to sell, you actually have to sell the whole business. You can't separate it. So the reason why we recommend set the RTO up as a proprietary limited, as a separate entity, have that RTO there as a separate entity, set up a trust. Now you can do this later after you register the RTO, set up a trust and then bring both the companies under the one trust. Now the reason why you would do that is so that you can have one ABN, one tax return. It makes it easier when you do your tax and business later on down the track, is if you set it up under one trust and then have the different businesses underneath. Now go to your solicitor or your accountant to get recommendation on that, on how you should do that. That's my recommendation. This just comes from my background of setting up RTOs and selling them. I know that if you go to sell it as an entity, you have to sell it as a sale of shares. We recommend you set up your RTO as a proprietary limited, and that specifically for that purpose. When you go to sell it down the track, it is less messy. If you set it up as a sole trader or the RTO as a trust, it is much harder to sell later on down the track. The easiest way to sell is as a proprietary limited. You should, even though you might be getting into RTO world thinking you're going to be running an RTO forever and ever, you never know what's going to happen. You don't know what's going to happen in the future. You should always, any business that you set up, you should set it up with the end in mind. How am I going to sell this down the track? What is it? And everything, like even with Vivacity, I have no intention of selling Vivacity at any time forecasted in the future, but I've set it up knowing that eventually one day I might sell it. And you should always have that mindset with your business, with what do I need to have in place to ensure that this business is going to be viable if I do decide to sell it. Because I know you don't know what's going to happen in the future. You don't know what's going to happen with yourself personally. You don't know what's going to happen with the world. You need to make sure that you've got it set up ready to go. So I know I've dwelled on that, but that's been a question I've had asked quite a bit, is how should I set up the company? I recommend that you set up a company. Okay, so the business structure of the RTO should be proprietary limited. That's the best part. Yeah, speaking as a lawyer, it is also limits your personal legal liability if it is a proprietary limited. Thanks, Peter, for that input. That's very good. Yeah, as a lawyer, I also find lawyers and accountants in general. No offense, Peter, but lawyers and accountants in general don't really understand RTO world, and they don't really understand how the businesses are set up. My solicitor didn't know that it had to be a proprietary limited. I bought an RTO from someone else, but I couldn't actually buy the RTO, so I know this from personal experience. The RTO was owned by a club. That club owned the proprietary limited, and it was Belmont 16-foot Sailing Club, and they couldn't sell the RTO. So that made the RTO less valuable for them to sell, because they couldn't actually sell the registration. All they could sell was the goodwill that came with the business, and that was it, and the resources, so the tables and chairs and computers and things like that. That's all that they could sell. They couldn't sell the RTO status. So I got it for a song, really. I got that RTO for a song because I had to do all the registration process, and I worked under partnership with that RTO whilst they were setting up. So I set up under the I set up my registration as an RTO under the registration of the Belmont 16-footers, and then ran my operations under that partnership until my RTO status was achieved, and then I transferred all the students over to the new RTO. So I'm talking from personal experience of how the business should be set up. So that's why I know. I've sold a couple of RTOs too, and I've worked with quite a few businesses with helping them with setting up and selling their RTO as well. Okay, you should have already provided us with the ABN and the ACN, so that should be populated. If you haven't provided that to us yet, this won't be populated, but this is part of your ASQA net application form. We should have all those details beforehand. You should be registered for GST. Now, something most accountants don't know is training. Even our current accountant that we were using didn't know this. RTOs, nationally recognised training, is GST free. GST free. That means anybody doing training with your organisation, you cannot charge GST. Do not, or anything like that. You cannot. You are not allowed to charge GST because nationally recognised training is GST free. Now, the brilliant part about that, when I own my RTOs, absolutely awesome, is that you get to claim your GST tax inputs back every BAS period, so every interim activity statement. So if you're doing IAS once a month, or BAS, so your business activity statement once a quarter, you get to claim back all your tax inputs that you've put in for GST. So if you've paid any GST for any services, including contract trainers, so if your contract trainers are charging GST, and they have to charge GST if they earn over $74,000 or more per year, they need to be charging you GST, and you can claim that back. So you claim that GST back. I used to always get a refund every BAS period. Every BAS period I got a refund. So brilliant. I miss that. I miss that now, what I do now. Now I work for the government, collecting them tax and paying them tax every month. It's a pain in the neck, but anyway, I'll get off my soapbox. Okay, so you should put if you've got a website, pop the website in there. If you don't have a website, just delete the row. So just delete that row. You don't need it there if you don't have a website yet. If you do have a website or you do plan, I recommend as soon as you set up your business, and we use ebusiness.com.au, I think it is, or no, eCompanies. is brilliant. You can register your company on there. It takes like 15 minutes, doesn't take very long at all. And when you register the company, it actually asks you, do you want to register a domain name at the same time? Highly recommend you do. Don't have to do it through e-companies. You can do it through another company. There's a lot cheaper places where you can go to register your domain name. But as soon as you set up your company name, I highly recommend that you grab, even if you are not intending on launching your website straight away, you should register your domain name straight away so someone else doesn't steal it. The last thing you want is to set up a company and then someone to steal your domain name because they've identified your business. So for Vivacity Proprietary, so we've got Vivacity Coaching as our website. We've got .com.au, .net.au, .net.com. We've got a whole range registered. We only use the .com.au, but we've got all the others registered to make sure that no one else comes in and steals our website name and then tries to trade under our company name and off our piggyback off our name. You don't want that to happen. So you need to set up your domain name so that it's registered already under your company name, and you want to get as close as you can to the company name. So I did think about just doing Vivacity, but Vivacity was taken. So that's why I went with the Vivacity Coaching. And you don't want a long domain name. You want to try and keep it as short as possible because it's really hard with marketing if you have a long domain name. So you want to go as short as possible. So I tried to go Vivacity, couldn't get that, so went Vivacity Coaching, but I didn't want to go Vivacity RTO Coaching and Consulting because that was going to be a lot for people to try and find. You do also want a domain name that's very similar to your company name. So if someone Googles your company, you come up organically. So it comes up in the web search organically. So you've got to think strategically when you're setting up your company name, what is easy for people to remember. Your company name is a brand, and that's what you are marketing, is the brand of your organization. Vivacity, the reason why I called the company Vivacity, it used to be called RTO Consult, but there was another company out there called RTO Consulting. So what happened was people were getting confused between the two companies. The other company didn't have so good a reputation, and I didn't want to be tarnished by their reputation. So I came up with Vivacity. One was someone recommended to me that you should set up your company name to be an image of you or something about you or your business or your company or your directors or something like that. But you then don't want to tie it too much into your company and your company into who you are. Because when you go to sell the business, like I know when I owned Reach for Training, my RTO, I was Reach and Reach was me. Like I was very much tied around me, but at least the branding was there for Reach for Training and I could sell that. That's the same with Vivacity. So Vivacity, the branding is around, like we brought, a lot of the branding was around me as Angela Connell Holden. So we actually had a lot of our marketing was videos of me. Now you see videos are of Viv. So Viv is our superhero. So you will see Viv, the superhero character that we have. Nothing like me, mine, by the way. So Viv, the superhero character, was so that we could look at the company as Viv, the superhero, is not just me. There's actually a whole range of people that you have in our team who are all the superheroes. We're all Viv, the superhero. So Veronica's just said, ha, ha, ha there. A lot of people said it looks like me. And the graphic designer did base it around me. The glasses are the mask. I have red hair, she has blue hair. So that's sort of how the graphic designer came up with her. But it is, the branding there is that Viv, the superhero, is the team. It's the whole team of Vivacity. It's not just me. And Viv came about from Vivacity, the name Vivacity. So Vivacity means vibrant, outgoing, and colourful. Which is me, but also it is the training industry. I find the training industry, I know we deal in compliance, a lot of what we do is compliance, but the training industry is a vibrant, outgoing and colourful industry. So that's how we came up with the name. So that's just, so today's webinar is a lot around the business side as well, which is my passion. That's what I used to teach before I got into owning my own RTO. So I was a trainer assessor, that was my background, was training, assessing in business. My passion is marketing and graphic design and that sort of area, so that's where I come from. Okay, so the management and ownership of the RTO. This is basically, your company. So who are the owners? This is a bit about the CEO and the directors of the company and who you are. So in here, you should put the name of the CEO. What is a bit about their background here? What's their role going to be? So the CEO may just be the CEO and not actually involved with the operations. They might just be doing, they might be a silent partner. CEO though is always the one that is responsible for the compliance. So the only person you should put in for the CEO is the person who's going to be responsible. The CEO doesn't have to be a director. It can be anybody else in the organization. You'll note that a lot of the big RTOs, the CEO is not even a director, anywhere near a director, but they still have to sign a fit and proper person form because they're responsible for the compliance. You could have someone who's an expert in the compliance side be the CEO. So you can nominate anybody. Normally when you first start an RTO, it's a me, myself and I RTO, where it might only be one person. So you have to be the CEO, but you can change that down the track. It can be, you can make it someone else who is the CEO down the track. Okay, so this should be a little bio about who they are, what their background is. You should attach their resume as well. So what experiences do you have as a CEO? It's really good if you've got an industry background in the industry of the training you'll be delivering. So what training you'll be delivering, what is your background in that? And brag. This is your brag document. This is where you get to brag about how good you are, where you've worked, what you've done, what experience do you have in your industry. Brag as much as you can. Brag about who you worked with. Brag about the different companies you've worked with. Brag about what you've done, what you've done, what achievements you've made in your industry. Not necessarily training industry, not as in an RTO, but in your industry of where you decide you want to go to deliver your training. So that's what this is your brag document, basically. That's what you're doing. All of the other directors should be listed in here. If you have more than one director, you should copy and paste this and put all of the directors in. So each director should be listed in here. Anybody who's listed on the company as a director should be listed in here. If you have other significant people in the organization who may not be a director, you can put them in here as well. So any information about them can go in here as well. So it should be always have the CEO as a minimum. You may just have the CEO and no one else. But you may have directors as well. So put the directors in there as well. And basically, yeah, brag. You're just bragging about who you are and what you do and what your background is. Okay, that's about CEO and director. So the org overview, so we've just put that you're going to comply with the standards. So that's the standards there. And then underneath, what qualifications do you plan to have? So we've got your initial registration for RTO or CRICOS. What qualifications? If you're already an RTO and now you're applying for CRICOS, you'd put your existing qualifications on here. And this should, if you are an RTO and you're applying for CRICOS, this business plan should be for the CRICOS side of the business and add that bit into it. What qualifications do you currently, what are you applying for now? Where do you want to be in the next 3 years? What qualifications do you plan to put on? You should have some sort of idea of where you want to be. We start to minimize your risk. We start you with one qualification only for initial registration, and that's to minimize your risk. Our number one goal for Kickstart package is to get you registered as an RTO. It's not qualifications. Qualifications are easy to add later on down the track. Registration's hard. So we want to make it as easy as possible for your initial registration. So we only go with one qualification. If you want more, that's fine, but you add that risk to your registration process, and it costs you additional dollars for us to actually write your training and assessment strategy and help you with the research with that. But you get one training and assessment strategy included with the Kickstart and one included with the CRICOS package. If you're doing Kickstart and CRICOS together, you get one TAS each. So you get 2 qualifications added for your scope of registration. That's included. Okay, so where do you want to go? What do you want to do? What qualifications do you want to do in the future? Crystal ball. It's not set in concrete. It's crystal ball. Where do you plan to be in the future? Not what you know you're going to do, because you don't know. So much can change in the next 3 years. It used to be that you had to write business plans for 5 years and 10 years, and they've stopped that now. And the reason why is because most businesses do not know where they're going to be in 3 years' time, never mind 5 and 10 years' time. Things change, governments change, legislation changes, the market changes. Like the mining industry fell over for a while. We're building it back up now. But we didn't know that that was going to happen. We couldn't forecast that in our crystal ball, and that stuffed up a whole heap of training organisations who were delivering training specifically for the mining industry. It really affected their business. So you really, one thing I always recommend, you should have more than one egg. You should have, putting all your eggs in one basket. You should have lots of different income streams with your RTO. When I had my RTO, I had 35 qualifications on the scope, from 5 different training packages, different areas. So I could pick up work in one area when another area was down. I had aged care, community services, disability, so I had that sector. I had hospitality industry and a range of qualifications that I delivered in there. Business, hairdressing, beauty, tourism, event management. So I had a range of qualifications. Don't recommend it. A lot of work. You have to be all over all of those industries. Fortunately, I did have a lot of experience in a lot of different industries, so it did make sense to me, but a lot of work. It is a lot of work. I'd recommend you get some partners on board and work with some partners who specialise in the different areas, because it's a lot of work. But I had lots of different income streams. I had income coming in from government departments, so I had government funding. I also had traineeships. I also had private sector that I was working with. I had networks with other companies where we were their main training organisation, so I was working with them. And then I had fee for service. I had job network providers that I was working with. So I had a range of income streams that are coming in. So you should identify, and what my strategy when I had my RTO was to go for skill shortages and target skill shortages. So I looked at all the qualification areas that I could put on my scope that would target skill shortages. But you might have something different. You might have a different strategy. Before I got into Reach for Training, like I fell into Reach for Training, I was a training coordinator. Before I got in there, I wanted to set up an RTO in business because that's my background. I wanted to do business. But I didn't end up doing that because I fell into Reach for Training, which had already had aged care on its scope, and that's how I fell into it. Like, I think that's how careers sort of go. Like, I didn't plan my career, I just sort of fell into the training industry. I didn't know that it seemed to be every role that I worked in, I was thrown into training someone. That's what I did, and I just loved it, really enjoyed it. I have a passion for this industry. I absolutely love the training industry. I don't care what you're teaching, I just have a passion for the industry. And that's what we hope that you have a passion for the industry and that you want to educate other people in the industry. They're the typical clients that we like to take on board. Yes, you should make money, definitely make money. We're not in business to not make money. You should make money, but passion for the industry. If you have a passion, or your trainers have a passion, or you have team members that work with you who have a passion for the industry, you're going to be successful. Okay, I digress, so let's go back. Okay, so this is an overview of where you are and where you want to go and what you want to do. You can change any of this text. We need as a minimum that you change the yellow, anything in yellow, but you can change any of the other texts if you want to do it. Now, you don't have to use this business plan template if you don't want to. We just provide this to you for you to use to give you a kickstart or get started. If you already have a business plan, you can use that one and take information out of this one and put it into your other business plans. So if you already have one there, by all means, just pull stuff out of this and put it into your other business plan. Where do you want to go in the future? So this section is snapshot now, what qualifications you got on your scope now, and this is where you want to go in the next 3 years. So what do you propose in the next 3 years? Where do you want to go in the next 3 years? What qualifications do you want to have on your scope? What facilities will you need in the next 3 years? If you're going to be growing in the next 3 years, you need to think about it. What will I need? What buildings will I need? Will I need more furniture? Will I need more equipment? Will I need contracts where I'm going to be delivering training on site at other people's premises? What will I need there? That's what you're just crystal balling it here. There's so much just crystal ball. You're just looking at it going, okay, best case scenario in the next 3 years, this is where I want to be and this is what I want to have. Now, dream big. Think about it. Dream big. What do I want to do? Where do I want to achieve? Where do I want to go? put it in here. This is what your dream is, you know, crystal balling it and dream. Where do you want to go? A lot of people get stuck with this because they don't know where to go. Where are they going to be in the next 3 years? Make it up. You know, as I said, crystal balling it. You know, I go, right, where do I want to go? What do I want to do? Like 3 years time right now with my business, I have no idea what I could actually achieve, but I do know this is what I'd like to achieve. This is what I'd like to do. And if you don't plan it, it's not going to happen. If you don't go, this is what I'd like to do, and set some goals and put some tasks and do some planning, you're never going to achieve it because you're not going to know where you're going if you haven't actually set a path for it. It's like Google Maps, right? You set a Google map, and when you do a Google map, you don't actually know where you're going, right, with a Google map. You put in the address of where you want to go. You put it in there. That's your goal. That's what you want to achieve. And you can visualize, well, maybe not visualize, but you can see the address of where you want to go. So a goal is setting, I can visualize, this is where I want to be in 3 years' time, right? That's what the business plan is. With the Google map, that's it. It will put in the Google map, you'll put in the address, and then it will tell you where to go. But sometimes you might not go the way the Google map goes because there's a roadblock, or because there's a traffic accident, or there's something happens along the way, and sometimes you have to veer off that map and go somewhere else and go a different path. But you know that your goal in mind is here because you set where your goal is and what you want to achieve. But it doesn't mean you're going to have a clear map on how to get there, because it's going to change, right? So, but if you at least have the goal set in mind, you know where you're going to go. You know this is what you want to achieve. How you get there, who knows? Who knows? Who knows what's going to come along in the next 3 years on how to achieve that? But if you don't know what you want to achieve, you don't know how you're going to get there in the first place. So dream big. Think about it. Just dream big. What do I want to do? What do I want to achieve? What do you want to get out of this business? What do you want to do? That's what you need to put in here in your future focus, right? So as you may be able to guess, I'm very, very passionate about this. Business, I absolutely love business. This is my passion. This is where I want to do more coaching with our clients, is in the business side, because this is what I absolutely love, is building your business and how to identify how to build that business. I did do a workshop called the 5 Steps to RTO Success. We didn't have a very big audience for it. I think we had about 6 or 7 people in the course. I'd like to do it again because it is my passion. It is what I like to do. Anyway, I'm just going off right now, aren't I? Okay, so that's your future focus, crystal balling it. Where do you want to go in the future? What do you propose? What will you need to get there? What facilities will you need? And it doesn't have to be set in concrete. ASQA's not going to come back and say, you said you were going to do this and you haven't done it. This is just you going, well, in the future, I would like to be doing this. And just put it in there. Dream big. Put it in there. Okay, we've just put some information in here about the vocational industry. Don't need to change anything here. It's just static stats and research that we've found. And we've referenced it where we got it from, so it's just stats here. Don't need to change anything there. Interesting read. You might want to have a read of it and get your other directors to read it as well. So it's just some stats about the training industry. This is a risk management that I've undertaken. This is based on what I know is the risks in running an RTO. So change in management, change in staff, changes in legislation is highly, highly likely. Like, I know the standards are going to change this year. They've already planned it. COAG have already stated that the standards are going to change, and they were responsible for those changes in legislation. So this is for RTOs. We just had a change last year for CRICOS, and there are plans for some other changes that will be happening with ELICOS and CRICOS standards as well. It's a no-brainer. This is our industry. There will be a change in legislation, so that's high. Competition is likely, and this you have to identify yourself. If you're putting a qualification on your scope that is a very well-known qualification, or it's something that a lot of RTOs, you should do some research into this. Who else is doing this qualification? Who else has it on their scope? You might have one, like we've got one at the moment that we're working with where they do drone licensing. Only one other RTO in the whole of Australia doing it. So your competition is going to be low. But it might be likely if you know that people are going to jump on board and put these on their scope, put this qualification on their scope. But I'd put that as low at the moment for that one. If you're putting childcare on your scope or business on your scope, your competition is going to be highly likely high. It's going to be high because there is a lot of other RTOs out there with that on your scope. So you can change your strategy here. I've just put some typical strategies that you should put in there. So you should look at this and change it to adapt it to your organisation. But I've just made it easier and filled it out with from my skills and knowledge, what I know. So if there's going to be legal actions, it's not a lot of legal action happens with the RTO world. So it is a low. It's highly unlikely that it's going to happen, particularly if you've got good policies and procedures in place and that you follow up on your complaints and appeals. And listen to our webinars, listen to me teaching you what to do and how to implement the policies and procedures into your organisation. So we've just got some typical risks in there. So you should have a look at it and adjust as need. This is marketing. You currently, is it highly competitive in the market of what you are going to be delivering? You should know this best. And you should be doing some research. You should identify who are your competition, who else has this qualification on this scope, what are they selling it for. This is rule 101 when you're setting up a business. Look at your competition, look at what they're doing, what do they have on their scope, and what do you need to do to be competitive against them. Okay, and put in. You may not have one competitor, you might have a couple. So put in a few in there if you do have a few. Who are your target audience? Who are the typical students that you'll be targeting to do this course? We have a list here of different people, different target audiences you can use. Highly recommend you change this, contextualize it, state exactly who it is that you're working with. So your target audience, I would change this a bit. So if you were in the childcare industry, your target audience would be, typically for childcare, would be new entrants who wish to get into a job working in a childcare centre. They don't currently hold a qualification. Their age range is normally going to be anywhere between 18 to 35-year-olds. They're normally going to be, a lot of them are, if your target audience, they're going to be non-English speaking background. They may be from that, depending on your area and where you're from. They normally are, majority of your students will be female. Who will be doing childcare. And that's it, profile. You're just profiling who are your typical students that should be coming in. You should know this if you know your industry. You should know who they are. Or have a look at your competition and what are they doing and who are they targeting. Be specific around who you will be targeting. Just because you put in here a profile of who your target audience is, doesn't mean you can't target other people. Doesn't mean you can't target people, existing workers. It doesn't mean you can't target individuals wanting to meet workplace requirements. It doesn't mean just because you target a specific area doesn't mean you can't capture other people out of that target audience. The reason why we identify a target audience is one thing, so you know who to market to and how to market to them and what strategies you need to put in place to market to that target audience, for one. Secondly, your training and assessment tools are developed specifically around that target audience. So you're not having to meet the needs of so many. The more you put in here in your target client group, the more you're going to have to adjust your training and assessment materials to meet that target audience needs. So don't put too many. Be very specific. Who are you going to target for this training and assessment? And it might be different target groups for different qualifications that you're going to put on scope. You might have two totally different target groups. So put the different target groups in there of who you're going to be targeting. Okay. Competitive landscape. So who are your competition? You should be identifying who they are here. What's your point of difference is going to be? We've got this as a standard, but what are your points of difference? So our points of difference with our organisation, with initial registration, when we're setting up initial registrations, we provide an accountant. We attend the audit. We do webinars. We do things that are different from our competition. What are you doing that's going to be different from your competition? That's what you need to put in there. Do a bit of market research, finding out who you're, and analysing who your customers are. Some of your customers might be job network providers, it might be businesses, so you don't necessarily have to put the students in here. It's who will you be targeting? What age range? Are they mainly male? Are they mainly female? What are their social status? What are your customer needs? So I've put some standard ones here, which is, you know, they want to get a job, they want to, you know, they want to do a course so they can upgrade their skills. So these are some standard ones there. How will you maintain a good relationship with your customers? So what sort of marketing will you be doing? Will you be doing monthly newsletters, going on social networks? So we've just put some standard ones here. You can just leave this if you want. This is typical things that all businesses should be doing to engage their audience. Your strategic implementation plan, like we've just put the standard stuff in here. You might want to add some more things if you want to. You can add more. This is just standard things a business should do. What is your mission statement? If you don't know what it is, make one up. This is a good opportunity for you to write one. So your mission statement is, this is what we want to achieve in 3 years' time. This is where we want to go and what we want to do. We have a vision and a mission statement. So our vision is helping the training industry to achieve excellence in the industry. So that's what we're doing. But our mission is to increase our turnover and to get more customers and to have a certain amount of customers. And what is that? You don't necessarily have to show that to everybody, but it should be, you know, where we want to go and what we want to do, what we want to achieve in the next 5 years. And that's what we've got there. So you should revise it every 3 to 5 years, your mission statement. We do it out once a year, so we review what we're going to do and where we want to go. One of our missions used to be quality is our success and 100% compliant is our goal. It's still a tagline that we use because it is still underneath what I want to do. The other one that I use quite a bit is we work with, what is it? So education changes lives. So through education, we change lives. Still in my heart, that's what I believe. We're in the education industries because we change lives through education. We are educating you. You're educating your students. We are changing lives. I've seen this personally happen myself when I'm teaching. I change lives. It's part of what we do in education. That's why I love this industry, because we change lives through the education. So you should have a marketing strategy. We've got some basic things here for you, how you're going to promote your business, things like that. So you can just delete what's not applicable for your organization, add others. If you have some other strategies you want to add here, you should add those in here. A lot of people think that you just need a business plan just for some of the things that I said today, for getting contracts, getting your registration, you know, getting government funding, things like that. Business planning is really crucial for your business. This is part of writing a business plan, is planning where do you want to go, what do you want to achieve. Actually identifying what do you want to do, what do you want to achieve out of your business. It's a really crucial part of your business when you're setting it up, is to plan. What do you want to do? Why are you in this business in the first place? Like, I love that ASQA make it a requirement that you should write a business plan, because most people don't. When they get into a business, they come up with an idea and go, woohoo, let's be an RTO. Or let's get into whatever business that they're going to do. How are we going to do it? I don't know. Let's just do it. Plan ahead. Successful businesses plan. That's what you should do. And get your team involved. Anybody, mum, dad, brother, sister. If you have a team of staff, get them involved. Get your directors, other directors involved. Everyone should be involved with the planning. Have a planning day. Hold a day and go, what do we want to do? How do we want to achieve this? Actually plan for it and then write your business plan for that. From that. I'd love to do business planning workshops. If anybody's interested, throw your hand up and I'd be happy to put one on, because I'm passionate about it. I'd love to deliver a business planning workshop if people are interested in doing it. Okay, here's some social media marketing strategies. Social media is the way to go at the moment. Like when I ran my RTO, it was newspaper adverts, very expensive. I used to spend 10 to 20 grand a month just on newspaper advertising. It was very, very expensive. Now I spend about $2,000 a month on Google ads, social networking, and just general marketing. So a lot cheaper than it used to be in the old days. Sorry, I've got a bit of a croaky voice today. I'm going to be losing it. I'm going out tonight, St. Patrick's Day. I've got my green shirt on, St. Patrick's Day today. I know I'm going to lose my voice tonight. Okay, so this is your operational strategy. This is just basic stuff that I know about how a training organisation should be run, what your training and development. So you don't need to change anything. If you want to, you can change it if you like. I've done a SWOT. I've just done a general SWOT analysis. What are your strengths, weaknesses, opportunities, and threats? When setting up an RTO business, being RTO specific. You can change any of these if you want. These are typical ones that I know of when you set up an RTO. Add more. If you have identified any strengths, particularly in your business that you have, add it. Any weaknesses that you particularly have, add it. So put your own in here as well. Some people just delete this and leave it. Yeah, fine. But really think about it. This is something you should brainstorm as a team. You know, do your planning day. What are your strengths, weaknesses, opportunities, and threats? It's been around for a long time, but people should be doing it. How are you going to respond to those strengths, weaknesses, and threats? Your operations. So we've got policies and procedures that you'll have. What milestones? I've got some standard milestones here. You might want to add more. If you're not going to move into bigger premises, take it out. If you don't think you're going to move, just delete it. That's fine. You don't have to have it in there. This is just part of your planning. It's still not a requirement of ASQA. All the accountant is going, yes, you have a business plan. Yes, you've done forecasting. Yes, you have identified where you want to go in the future. Any memberships or affiliations that you're going to join, this just strengthens who you are. We have Vivacity membership following registration, so we highly recommend that you do membership because we'll support you ongoing. There's a few other here. Then we're going to go to finances. These are your supporting documents, so you should have your resume of all your directors in there as well. And that's your business plan. There you go. Okay, any questions on the business plan? Because I'm now going to switch to the projected profit and loss. I've got no questions. I'm either overwhelming you or you're just totally getting it. I'm hoping it's that. I'm hoping you're totally getting it. Okay, cool. Okay, no questions, unless you've just all dropped off and no one's here and I'm actually talking to myself. So that wouldn't be first. So I'll just see if anyway. Someone say hello so I know. Yes, okay, cool. So Veronica's still there. Cool. All right, cool. All right. Now, projected financials. Now, we get a few people get stuck on this because they're like, well, I don't know. What are we going to do in the next 3 years? Make it up. The other one I say is just pull it out of thin air. Make it up. It doesn't really matter. Where do you want to go? What do you want to achieve? This is the qualifications you have on your scope. How many students do you think you're going to have in the future? What do you plan? Like, it's not set in concrete. ASQA aren't going to come back and say, you said in your projected financials you're going to do this. Why haven't you done that? They don't look at this again. That used to be every re-reg, so every 5 years, they would get you to do a financial viability assessment every 5 years and you had to do an updated business plan. They don't do that anymore. That doesn't happen anymore. The only other time you're going to have another financial viability undertaken is if you then apply for CRICOS, or if you have had a complaint made against you, something around financials, they might get you to do a financial forecast. At the moment, this is what the standards say at the moment. There is no requirement for you to do a financial viability assessment again, and they're not going to check your figures. So make it up. You want this to be positive though. So we want the numbers to be positive in here. So in the future, they should be positive. Okay, follow the instructions. Okay, we have a few screens here. Don't touch any of these ones. All these spreadsheets, they get populated from the input sheet. So you do not touch any of these. Do not touch. I'll just reiterate, do not touch, because if you put something in here, it's going to stuff up the formulas that are coming in from other pages. So you'll see here, there's formulas in here. They're all coming from the input sheet. Okay, so you don't need to touch any of these. This will all come from the input sheet. The accountant has put formulas in here that will forecast your profit and loss for you. Okay, don't need to do anything. Just need to input here. So only enter data on this page only. Do not add or delete any rows from here. Do not add or delete. Just leave it as is. Just enter data, and you're only entering where these dashes are. Okay, you're only entering data here. Do not put any words or text in here because the formulas won't work. You can't put nil or none or no or not applicable or anything like that. If it's 0, put 0. If you've got 0 in year 1, put 0. I don't think you're going to have 0 in year 1, but if the figure is going to be 0, just put 0. Just leave it as 0 or leave it with a dash, okay? But don't put any text in there. It says enter the GST inclusive amounts. Training is GST free, but your expenses will have GST on them. So you put the GST in here and you include the GST. Put the total cost of the year in the applicable column. So put the total cost of what you want to achieve. What do you want to achieve in the year? So you're going to put in here the rate. So what is your director's fees here? So if you decide you're going to have director's fees, you might want to pay, okay, that's protected. So it must be here. It must be the blue that you're putting in, are you? Okay. Sorry, you're putting it in the blue section. There you go. So it's only the blue section you're filling in. Sorry, I just made a mistake. So only putting your data in the blue section, nowhere else. So you might want to do fortnightly. You might want to change it to bi-monthly, quarterly, yearly. You might want to do a yearly fee. So just click on the down menu and change it to what you want to do as your director's fees. So you might want to have your yearly director's fees as $50,000. So you'll see it will change down here. I don't know why, as director's fees, you're getting super. Anyway, I'll look at that. I'll look into that. And you might want to increase that each year. Okay? So, and double it each year. As I said, crystal ball it, make it up, pull it out of thin air. What are you going to do? Too many zeros in there. What do you want to do? Just make it up. Generally, in your first 3 years, you will double your income each year. General rule of thumb, you'll double each year, but it may be different. You should base this projected forecast of projected profit and loss on what are you doing now in current businesses. How have you grown in your current business? Where have you gone in the future there? Like I base what I'm telling you now, I'm basing this on what I know I've learned from running businesses. If you've never run a business before, just make it up. Go do a Google search. I'm sure you'll be able to do one. If you did a Google search on projected profit and loss, I'm sure you'd find a whole heap on the internet. So just make it up. So you may put that you're going to have no director's fees in the first year. Highly likely you won't have anything because you won't make a lot of it. It'll be money that you're putting in the first year, but you might want to put in that the second year you want to take out 50,000, not 500,000, so 50,000. 50,000. Get the keys. 5,000. Okay. We'll just change that to 50. And then the second year you might just do 65,000. Okay. The fourth year you do 75,000. All right. Just make it up. Whatever you want it to be. You just pop it in there. RTO manager. So I normally would go yearly here. Yearly, you're looking at a salary for an RTO manager and highly likely in your first year, you're not going to hire an RTO manager. It'll be your second year that you'll hire one. And in your second year, you're looking at anywhere between, in general, it's going to be about $80,000. Just not getting these figures today. It's going to be around about 80,000, but it can be anywhere between $50,000 to $150,000 for depending on where you are, where you're located. That will depend on how much it is, and it might be put someone on part-time to start with, so it's going to be less. You're going to be about $60,000, and then in the future you might go, I'll go up to $80,000 now. So you change the figures as you go, and just make it up. You're just making this up, okay? But generally, an RTO manager is going to be around about that much. 1, 2, 3, 90,000. Okay, so training support officer is just a general admin person. So you're going to be looking at around about $45,000 to start with. You might have them first in the first year, and then the second year, you're generally putting up their wages by about $5,000 each year, so around about that much. Oh my goodness, I cannot get these figures. Yeah. Okay, cool. No worries, Peter. This is going to be recorded. Peter has to leave. This is recorded, so you'll be able to watch this later. So, yep, catch you later, Peter. All right, so you're just putting in what you think the wages will be, and just keep going through what you think all those wages are. Trainers are going to be anywhere between, so you're looking at, with a trainer, you're looking at, you only have monthly. Okay, for a trainer, you're looking at around about $70, you know, $50 to $70 an hour. That's what you should be looking at. So you should be looking at, well, you might want to put someone on full-time, but you might have them as a contractor. So you should figure out how many hours would they be delivering, and how much would you be requiring them to have. So, so if I did a quick calculation, so if I was delivering a course in my first year and I have one trainer who might be delivering 6 hours per week times $55 per hour, and I times that by 4, so that's $1,320, okay, per month that you're paying. All right, so that you're just calculating it, working it out, what that would be. Can all of those staff be part-timers? Sure can. You can have all of those trainers as part-timers. Yep, for sure, and highly recommend it. I'd also recommend they all be contractors. When you first start, all your trainers should be contractors, and you're paying them as a contractor. So, you know, you just work out how much is that going to be. So in the first year, you might only deliver 1 day a week, but in the second year, you might have like 3 classes a week, and that times it by 3, and then you've got $3,960 per month that you're paying, okay? And that's how you work it out. I'm just making up these figures. I'm just pulling it out of thin air at the moment and just making it up. And you should put in here, trainer. I won't let you do that. I might get it so you can change that. So you can have the trainer for each qualification, what they're going to be in there, so you know for each qualification what you're going to be delivering. I'm going to be working with the accountant with this and actually identify how we can, some of the things that you can change. Well, you can put it in here if you wanted to. So you could put trainer, business, and then do trainer, first aid if you wanted to. So you can put them in there, so you can actually change these ones. I would like, and I might talk to the auditor, the accountant about this. I'd like to change this to weekly instead of monthly, just to make it a bit easier for you. But you put your figures in here for the trainer for the specific course, because some of them you're going to deliver more of than others. Some would be like a business trainer, you might have permanent full-time, and your first aid trainer is as needed contract, which would be, like, I know I had a first aid trainer that came in only once a quarter. So, and I did one first aid course that delivered to all the students. So I made it much easier that way. So this field here is being automatically populated for you. So you don't need to do anything. You don't need to touch it. You're only touching the blue bits. That's it. This one should be locked out. I don't know why they're getting you, because you don't want to change that super. It's always going to be 9.5 at the moment. So I might get that changed so it's locked out. But this blue bit is the only one that you're editing, all right? The other ones are going to be populated for you. How much do you want to spend on advertising? How much do you want to spend on radio? How much do you want to spend on television? Electronic would be your website and SEO. And I would say, yeah, monthly there. So you're looking at about $2,000 per month, I'd recommend. So you mostly start your first year. You might start at $500 per month, and then you should get it up to $2,000, and then, you know, change it the next year to $3,000 or something like that. Okay, you're not going to have much in print. It depends on your organisation. Most people aren't going to do print these days. You may not do radio. It depends on your industry. If you don't do radio, just leave it blank. If you're not going to do television, leave it blank. You will be doing signage, but that's going to be a one-off. Basically, you're going to do a yearly for your signage. It'll be the first year. In the first year, you'll need about $1,500 for signage in your first year. You're not going to need any for the rest of the years unless you plan on moving your building. So you're not really going to need any other signage. It might be advertising staff. You might be paying for someone to sit on the street corner and do some advertising for you, or getting out there and doing some advertising for you. So you might have that one in there. That might go in there. Rent, what's your rent going to be? So that should be month. What so what is it now? So I know it might be 2,500 now, but it might be in the future. You might want to go into a bigger building, so it goes up to $4,000. So you need to work out what that will be. Forecast. It's just the future, okay? Working out where you're going to go in the future. Thanks, Veronica. Thanks for attending today. As I said, it'll be recorded. If you need to jump out, not a problem. Anybody, if you want to jump out, that's not a problem, because I'm going to be recording. Even if I'm sitting here talking to myself, I will continue recording so you can access the recording. So just keep filling these in. If you need, if it's not applicable for you, just leave it blank. If it's not applicable, don't worry about it. If you won't need security, don't put security in, okay? Estimate your repairs and maintenance. Like you're going to need, I would say at least, $5,000, or maybe $2,000 for your first year, and then you might go up to $2,500. Just add $500 each year. As I said, you're just sort of making it up, and it will depend on your building and where you are and what you're doing. So that's what that would be. If you're going to have a cleaner, if you're not going to have a cleaner, leave it. If you're going to have a cleaner, one thing I recommend as a business owner, you shouldn't be focused on the cleaning. You should be getting someone else, but it might be a team member that's doing the cleaning. So you could leave that blank. Sundry expenses are just stuff that your team members will be using. So tea, coffee, that sort of stuff that will be in the organisation. How much will your insurance be? So they've actually put a fee in there for what they think insurance will be. What your building and public liability, professional indemnity. You have to have public liability, but you don't have to have professional indemnity, although I strongly recommend it. If you're going to be doing work placement, you should have insurance to cover your students for work placement. Go to your insurance company, they'll tell you how much that's going to be. And these ones, your printing and stationery, that'll depend on whether you're going to print your textbooks for these students or not. It's going to be up to you whether you're going to do that. What are you going to be computer costs? What are you going to be phone costs? Phone costs, you're just going to have to make it up. If you have a previous business, you can base it on what your previous business is. I know my phone bill, because we have reverse charges one. I think it's about $600 for that and my mobile and things like that. So it just depends on what you've got set up. So yeah, work out, that's per month. So that's what I'm paying per month. But you might start with only $200. So include your mobile in there as well. So the telephone and mobile should be in there. All right. And put, you are going to pretty much double each year for the first 4 years. You're going to double. Okay. So put that in there. What are you going to be? Computer costs, internet. Is internet in there? I don't think internet is. So I might add internet. So there's a few things in here that I'm going to be recommending to the accountant to add in here. Your accounting fees. So what you work out to be, and normally it's going to be yearly. Your accounting fees, it's not going to be monthly. Bookkeeping fees generally is. Bookkeeping you should pay. Your first year, you're mostly not going to pay anything. You're going to do, me, myself, and I. You're going to do everything yourself. Then you're normally going to be paying about $600 a month for bookkeeping. It's not very expensive, and then you might go up from there. Accounting fees, it'll be accounting fees. So you're looking at about $500. Then you might go up to about $2,500 because it's going to be more work, and you might be getting them to do BASs and things like that. But then it should even out a bit from there. Okay, so it should make it a bit easier. And then your bookkeeping fees might go up, might be the same, but just go with CPI and $800 or something like that. So I'm just making stuff up here. Legal fees, you're not really going to have a lot. That will be yearly fees as well. I'm going to keep this as a template. I will do some more work on this, and we'll actually use this as an example of how to fill one out. So you'll have access to this later on as well. So I'll have this as an access that you can access. This here will be all your quals that you're going to be offering. How many students do you think you're going to be having in that course? So if we did BSB 50115, which is a business qualification, so you can just put the code, you don't have to put the whole qualification in there. How many students do you think you're going to have in a year? I don't know how they're going to calculate that. And the fee per course, so if we went $6,000, okay, And then year 2. Okay, year 2, year 3. So that then we're going to go down to year 2, year 3. So you could just copy and paste. Oh no, they'll come over. Yeah, so that's come over there. Now, I don't agree with this because you're mostly going to add. Oh, so you might put on your forecasted qualifications that you're going to put on your scope and just put it as 0. You're going to have 0 students, but put all your other qualifications on here. So if you're doing first aid, so for example, HLT, AID, 001, for example, you do a few students. Actually, for business, you'd mostly only do about 20 students in your first year. But first aid you do a bit, and you're looking at about $150 per course. See, it's done all your calculations there for you. So it makes it easy, and just make it up. You're just making it up. You just pull it out of thin air, make it up. Just what you think you might do in a year. All right. And no, keep it low in your first year, and then go higher in your subsequent years. Okay, for each year up that. In general, you'll double each year. In general, as you build a name, you'll double each year. If you're already operating under a partnership with another RTO, you're already going to have an idea of where you're going to be in the future and what you're going to do in the future, because you're going to base it on the numbers that you currently have now. Okay. All right. Any other assets and liabilities that you might have? Computers, projectors, things like that. So that might be, they're more likely going to be yearly, those things. Projector you're only going to buy once, really. Seriously, you only buy it for the first year. Photocopier, you'll get a lease. So it might be monthly, what your lease will be per month. If you have a motor vehicle, you may not have a motor vehicle, so you leave it blank if you don't have a motor vehicle. If you plan, I would plan in the future, mostly in year 3. You'll mostly put a motor vehicle in then, and you're looking at, and you would only be paying, because you'd be dividing it up over 3-year periods, so you'd be looking at about $22,000 a year. So for a car, maybe not even that, might even only be about $18,000. Okay. It's a good idea. I recommend you lease a car through a business. I do it. It's the best way. You can't actually lease a car through a brand new business in the first 3 years. So it won't be till the 3rd year that you'll be able to do that. But you could, what equipment? So that's only going to be in year 1, but it might be, you might be planning for growth. So for the first year, you might only do that $5,000 worth of equipment, and then you might want to add a bit more. So you might want to add another $2,500. So it might be less. It might go less the other way. Because you're setting up to start with, so you might only do $3,000 worth of computers, and then the second year you might want to buy a few more computers. So you might want to double that and add that. Making it up, just making it up. I'm making all these figures up in my head, okay? Nice and easy. Don't overcomplicate it. Data projectors are only about $1,000 now, so it's not going to cost you very much, but you may not, after you've set that up, you won't want to buy any more. That's it. A photocopier, you're looking at around about the photocopier per month. I think you're looking at about $300 per month, I think it is, and that should continue for the. So you should be able to copy that over. So that should continue over for the following years. Okay. Highly likely you're not going to sell any assets. Highly likely that's not going to happen. You might have a loan, put your loans in here, and then what you're going to pay off your loan. So your repayments will be there, and what you estimate the interest will be. Estimate, just make it up. That's it, you just make it up. Have a good weekend, Sir John. Thank you for joining us today. Thanks, bye. And then just your injections and things like that. How much money? I've got a director's loan, so what your director's loan will be, how much money you're going to withdraw as a director, what your bond is for the rent. So you're just making all of this up. So I'll keep going and fill this in with a bit more figures, and I'll have you have an example. It may not be this one. We've got our accountant's going to be reviewing this and updating it with some things here. So I'll have one for you. I'll definitely have this one for you, so you can have this as an example. But yeah, as I said, I'm just making it up. Okay, and then you'll see this is getting populated now. So we fill in the front, and all of this is getting populated. Don't change anything. Do not touch this. You leave this alone. It's only this one that you're putting data into. And that's it. That is your profit and loss. And that's it for the documents. That's all you need. If you have any further questions following this webinar, please do not hesitate to get in contact with me. You can send me a message or something like that. The next webinar is going to be on Monday, the 3rd of April at 3 p.m. So the membership webinar is going to be on at that date. As I said, this is going to be recorded, so you'll get a copy of this. We'll send you a link to this. We're also going to be putting it on Unicorn under the Financial Viability ASQA net stage under the help section. When you go into Unicorn, it's going to be under help, and under that stage, we're actually going to upload this into there, so you'll be able to access it there. Great, thank you very much. I hope you got a lot out of this. And that you'll be able to use this into the future on how to fill in a business plan and how to fill in a projected profit and loss. Thank you very much for attending today. Have an awesome weekend. I look forward to catching up with you sooner or later, one day. Thank you very much, and see you at the next webinar. Thank you. Goodbye.